The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
All right, stock of the day. Thought we'd take a look at Austal today. The defence contractor has won a $670 million contract from the American General Dynamics Electric Boat Group. Austal will expand its production capacity in the US in its dock there in Mobile, Alabama, with an additional shipbuilding components facility to be completed by 2026. From there, the company plans to support the US Navy goal of building 2 new submarines a year. The share price up 7.5% today on that news. David Lane, this is a stock that really is driven by contracts, isn't it? Austal, of course, started in Perth, big shipbuilding and doing multi-hull aluminium and steel ferries and fast ferries and the like, have moved into defence contracting, got facilities now in the US building there. It's very tied to that defence spending now.
Yes, absolutely. And it's one of those businesses that sales aren't a problem. They've got a big pipeline of projects to complete. They've got currently about $12.6 billion worth of contracts that they're about to deliver. And yeah, sales aren't a problem for the business. It's because of the large nature of the ships that they're building, the potential issues that they face and they have faced over the years is actually being able to deliver those profitably. The new contract that they've received is a positive. It's actually to build a new building. So they're building a facility which ultimately will end up being part of their long-term facility. But as you said, they're a global builder now. They've delivered 350 vessels to 59 different countries. And Austal is probably one of the key beneficiaries for Australia from the AUKUS agreement. So long-term, they hope to be a big beneficiary of that. They're working on a heads of agreement with the Commonwealth of Australia to become their shipbuilder of choice. So, and today's contract obviously shows that they're linked quite closely to the US Navy. So interesting business. If you're looking for a long-term exposure to that defence spending, and defence spending is going up significantly around the world, Austal will be a beneficiary of that. The challenge, though, is can they do it profitably? So at the moment, they're trading on a PE ratio of around 55 times. They have turned around from a loss in financial year 23 and have done a lot of work to improve their focus on profitability. So a lot of the forecasts from management are that 26, 28, they will be significantly more profitable. They're focused on return on investment. So you've got to really take a long-term view with Austal. If you want to back that AUKUS agreement, it's one of those stocks that you can have in the portfolio. Current pricing, though, I'd probably be holding.
Yep. Okay, and you look at it there, the 5-year chart that we had before was 475 sort of 5 years ago, now down in the twos. Last 2 or 3 years, it's just bubbled along. Look at that at the bottom. So, markets sort of not quite sure where this company's going to go. Got some big investors in it, Twiggy Forrester's in it, Gina Reinhardt's in it. There's been talk of private equity taking it over as a strategic asset.
That's right. Yeah, strategically, it's a very important business. But yeah, as I said, that profitability is the key to the success, and that's what we've seen over the last few years is that they weren't able to deliver profitably. Obviously, with those large contracts, you've got a lot of moving parts, a lot of costs, including steel and a lot of components that go into the ship. So, yeah, being able to deliver profitably is the key to the long-term future.
Kai, what do you think? From what David's describing, it's sort of like a floating version of an infrastructure company or a big building services company that get giant projects, which in total look great, but they're really hard to deliver. If you get it wrong, you lose a lot of money. If you get it right, you can make a lot of money.
Absolutely, you know, I agree, and exactly what David was saying before. The market is looking at whether they can deliver these projects profitably. But again, you know, these contracts are, what they have going for it is that they are quite sticky. They are government contracts, and you know they're on target to deliver. Their goal is to deliver 1 Columbia class and 2 Virginia class per year under this contract. So you know, it's a substantial uptake, and it's created about 1,000 additional jobs.
And so important, they do have a facility in America, isn't it? Because the Americans, sort of this paranoia about sort of any of their defence spending going offshore, they get a natural run-up because rather than building in Perth, they're building in Alabama.
Oh, yeah, they got the good end of the deal in the as you know, as with AUKUS, but I won't go too much into that. I think for them having the facility on US soil is definitely an advantage. Yeah.
So, what's your view on it?
I think this is really positive for Austal. Like, you know, as we've seen, defensive spending has been going up across the globe. Austal is one that we've looked at and we're interested in it. I think at these valuations, if they can deliver some of these projects profitably, we'll be interested in getting in. Right. But it's not going to be not for now.
Right.
I think it's, you know, there's with Drone Shield was one that we picked up earlier on in the year that's done spectacularly well. Obviously, it's come back after that massive run-up. That's got more growth and potential. But I think Austal, it's slow and steady. If it can deliver, it's a solid stock to hold. That's what I would look at it for.
But in the defence space, you'd prefer Drone Shield?
Oh, I waited. That one's very forward-looking and sentiment-driven, but it definitely has more growth potential.
Right.
Yeah.
Okay.
Yeah.
You're sort of a bit nervous. You sound as though you've been through the trauma of Drone Shield going through the roof and then pulling back enormously. So confidence a bit dented.
Oh, it's not for the faint-hearted. But we did fairly well. We didn't capture the whole upside run. Right. We bought it at about, I think we bought it about 80, close to 80 cents, and sold it at $1.30, and it shot up to $2.80. I think.
Yeah.
So, but just as quickly, you know, if you got in at the top, it's back at $1.12. So not for the faint-hearted.
Right. Okay. All right. Let's. That was our stock of the day, Austal.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.